All right. Hello, everyone that is joining us or going to be watching this afterwards. My name is Brian Mallon. I'm with Diane Salvaggio, and tonight we're going to talk about the journey to your first home or refinancing or anything else. We're going to cover a little bit of everything from what you need to know from the budgeting perspective all the way through the entire process of getting that home, moving in, and things to think about afterwards. We are recording this live. If you do have any questions and you pop in to the live Zoom, go ahead and just put them in the chat and we'll have time at the end to answer any questions. I appreciate that. So let's get it going.
Sounds good.
So here we go, guys. And here is kind of just the intro page. I want to present who we are. Basically, my name is Brian Madeline, and I'm with Madeline Financial Coaching. I own my own financial coaching company. I have full time now for coming up on 2 years. Previously, I was in 6.5 years of banking, assistant management, um, banking on the retail level. And basically, I just help people, honestly, couples mostly, and individuals get all their finances back in control. They have a lot of money anxiety. I help them relieve their stress and get a money plan so they can feel great about their future. Glad to be here. And she needs no introduction. I've known her for a long, 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 long time. A lot of good things she's done for our family and for so many other clients. But Diane, why don't you tell everyone about you a little bit? So.
Hello, everyone. I'm Diane Salvaggio. I am a branch manager and senior loan officer with Mortgage One. My NMLS number is 203797 if anyone wants to take note of that. I've got about 40 years plus experience in the real estate mortgage industry. I mainly now am focused on the mortgage side of it. I have been doing mortgages at Mortgage One since 2009. I love what I do. That shows in all the clients that I've assisted in the past and hope to assist in the future. So I'm going to talk a little bit tonight and just wet your whistle a little bit about what it looks like from the mortgage side to actually go through the process. But I would highly recommend that you contact Brian or me individually if you've got some further questions that you'd like answered. We're really only going to just touch on some of these topics. But again, Diane Salvaggio from Mortgage One, been here since 2009, going to stick around for a little while longer and help you with all your financing needs.
Awesome. Yeah, so let's get right into it, you guys. How does today's topic benefit me as a potential home buyer here in the future, hopefully in 2024, right? Well, honestly, we bring a vast majority of everything you need. As I said, as you will see here momentarily, you need to understand from the very beginning of what you need for a home before just kind of jumping in. And we're going to get so much into the details of why you need to budget it, make sure you can afford a home, a mortgage, um, all the way through what type of different loans you might need, what else extra things you need to know about having a home, because you don't just buy a home and just snap your fingers and everything goes well. There's so much more that you have to think about. And then we also have resources today of other people that you might want to contact along with a mortgage person or a financial coach as well. So we'll go over all that. We'll answer some questions if there is some at the end. And there's contact information at the end, you guys, where if you go home and you're sitting there and you're like, hey, I got more questions, reach out to us. Don't hesitate. So we're going to cover it all right now. So let's get right into it. We're going to discuss the home buying pillars of success. There's a set of pillars that me and Diane have established that we think is most important. Budgeting for that purpose, you guys. Like I said, you have to budget that for this purchase. It's going to be a huge change. It's the biggest change you're going to make probably in all of your finances up front. Pre-qualification, what that kind of looks like. Diane's going to dive more into that. Maintaining credit systems during the process. Like I said, our final thoughts, question and answer at the very end. So our home buyers pillars for success. So the three that we wanted to focus on were pre-prep and budget. And so that's looking at you have to pre-prepare yourself for adding a larger mortgage payment into your budget. We're going to discuss more about the details here in a minute, but it has to be able to be fit in your budget. And we're going to talk about not rushing into a purchase and so much other things. Building trust in people that you're going to work with, along with um, mortgage lenders, maybe financial people to get your budget in order before. So you're going to want to talk to or get associated with probably a realtor and some insurance people, and all this other stuff will cover it. And then making sure you manage as you go through. We're going to have a lot of repeat things that we're talking about tonight. You'll notice managing as you're going through the process. There's so many steps that you do and don't want to do while you're in the process of buying. So building and prepare a budget. Let's talk about that budget word. We like to call it a plan. That's our new thing, us coaches in 2024, because budget is like, oh, you're so restricted. It's a plan. But when I coach and I discuss budgeting with people in general and how it's going to associate with your mortgage or your home buying, is I break it down real simple. I keep it simple. You just need income, expenses, debts, and recurring bills to get started. A lot of us don't budget or haven't budgeted in years. It's like you're starting all over again. Now you have to determine, like, how do you want to budget? You know, there's so many, there's apps on the phone if you're a technology person, there's spreadsheets if you love Excel. You can handwrite everything else. It's just the importance of getting started and understanding like where the mortgage is going to fit into this. But you have to start the budgeting, some type of budgeting to see visually, because most of us are visual learners. You have to visually see what everything is laid out to see where you are and realistically set goals of when can you buy a mortgage if it's not right now. So what to consider, the little thinking guy, Pokemon or Dragon Ball Z or whatever I decided that was. You know, one, do you have it together? Do you have the money? Do you have your life together? This is things to understand. You know, there's a lot of mortgages depending in cities and states that you're in that are constantly over $1,000. Some of us got lucky 10 years ago and are paying less than 1,000, but you know, that's a lot of extra money. Do you have it together? Are you ready to make this big purchase in the next 6 to 12 months? Can you afford it? Again, a lot of repeat stuff, you guys. Can you afford it? Okay. Now maybe you got back into your budgeting, or you finally started budget for a month or two and you're like, all right, cool, cool, cool. What do I need to do? Well, what if you call a mortgage person and say, hey, how much would be, this is what I'm looking for. This is my limit. This is how much I want. Can you afford that monthly payment? If they come back and say $1,200, now you got to look at it and say, well, I might not be ready, or I might be. Remembering the extras, that's key. And Diane will go through this more and more as well. It's going to be a lot of repeat stuff. Like I said, remember the extras. You don't just say, okay, I got a mortgage and sign the papers. Cool. There's property taxes. There is insurance. There's so many other things that are going to be added into that mortgage, whether you pay for it up front or put it into what's called an escrow. Either way, it's going to add more money onto the payment. And then prepare for expenses after. Nobody moves in a house, I'm convinced, and everything goes perfect afterwards. Nobody, not 1%. And Diane will back that up too. You know, you move in 3-6 months later, all of a sudden your refrigerator goes out. All of a sudden, then your furnace is giving you fritz, and things are preparing for the expenses after. That meaning you don't just budget for the mortgage. You got to think down the road too. And that's why budgeting and understanding if you can afford the mortgage and so much more is so important up front before you get into the pool, as I call it. All right, but that word, budgeting, is so boring. That girl looks so bored. My philosophy is really simple. You make it work for you. If your budget isn't going to work for you, or if we're working together and you're like, this isn't working, then I'm going to find a way and you're going to find a way to make it work for you. We don't ever want to get you in a position where you're just budgeting, going through the motions, but this isn't fun. Nothing is good for me. Don't forget yourself, right? I mean, I'm not saying go spend, you know, these Stanley Cups for Target ones that for $140 or $45 for a little mug or something like that. Don't go crazy every month, but you know, every month maybe say, you know what, I've done good the last few weeks. I'm going to go buy a cup of coffee. You know, it's just not forgetting yourself, because we get so set on our monthly budget that all of a sudden the whole year goes by. And then 2 years goes by and you're like, man, I haven't been on vacation in 3 years or something. Like, you don't even remember about yourself. So keeping a little bit to yourself is always important. And just like anything else, especially the last few years with inflation, be prepared to adjust. Everything changes, you guys. I don't know if you've been in a restaurant lately in the last year. It's crazy how expensive it is. Everything is going up. everything on the home side, Diane will talk about that, is going up right now. Car insurance, home insurance, I mean, things are going up, 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 up. People are trying to match with inflation, so you have to be ready to adjust your budget. So, you know, this was this question was more for in person. So we don't want to screw anything up by unmuting people, but what is the toughest category that I see and most people see within the monthly budget to budget properly? I'm just going to give you the answer. It's groceries, to be honest with you. And there's a little chart here on the bottom. And this is going to be, this example is loosely, I changed the numbers, changed the names a little bit, loosely related to one of my clients. There are a couple. Change the names. Jen and Jim, sample budget, it works for them. As you can see, they got a pretty set of standard stuff: credit cards, car payments, cell phones, student loans, a current mortgage in this case. But this is just more so, I'm trying to gear this towards, like, if they were going to add a mortgage, this would be about the percentage. It's a huge chunk of your percentage, you guys, in your budget. And Diane will talk more about that too. But before budgeting, these people literally spent with no control. Okay. They had no budget. They were spending, spending, spending. A lot of us did that in the last year and a half. We were scared to check our accounts. We just spent, 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 said, oh my God, please, please get to the next paycheck. Their credit cards were close to maxed out. After organizing their debts and working with me and finally building a budget, they have freed up $406 a month, you guys. That's a lot. And that's, like I said, that number is true, 406. I have done that with a client. I had to change all the other stuff for privacy. But now they still have debt. Obviously, they've been working through it. But at least they have a budget. They know what they're doing. They're prepared to add a mortgage payment still. And as you can see, roughly that blue section will be a huge chunk of your budget and all that. So in saying that, we're going to turn it over to Diane, and she's going to go through pre-qualifications and everything else. So go ahead, Diane. I will do my best to flip through. You can put your finger up or something like that since you're on the other camera, and just go like that, and I'll move on. Go ahead.
Okay, so let's start out with the very basic principles of, can I afford a mortgage? And that's where the pre-qualification process is so very important. And really, the very first step that I tell my clients is that you need to make sure that you have all your paperwork in line for the pre-qualification process. And by paperwork, I mean make sure your tax returns are filed on time. You have access to paper copies of your pay stubs. A lot of employers nowadays send everything through an electronic portal. Well, as a mortgage officer, I have to visibly look at those pay stubs as well as your W-2s. So first step is get your paperwork in line so that you're ready to go with all the documents we need to look at. So pre-qualification is super simple. It really is getting the elephant out of the room, taking a look at your credit report. And in that credit report, it will show all of your current debts, all your past debts, how you've performed on those debts, and more importantly, what your credit score is. So we take that credit report, we merge it with your income, and we're looking at really the last 2 years of your employment. What is your gross wages? And that can get a little tricky. And I'll get into a little bit more of that when we talk about the house payments, but we look at your gross wages. We don't look at what you live on, what your net income is about. So we want to be super careful, as Brian mentioned earlier, about that budget, because I'm going to pre-qualify you based on what you gross. Really, you're living off of your net. So this is why those documents are super important, so that we can actually look at what do you net when we're forming that budget. The budget is a very, very important part of the home buying process. And the reason is that you really need to examine how you spend your money. I had a client some years ago who was a huge baseball fan. And part of his monthly budget was, in the summer months, he wanted to travel to all the different ballparks. You want to make sure that you have, as Brian mentioned again, you've got to have a little fun built in there. Those are expenditures that I'm not going to see looking at a raw credit report, or maybe even by having a brief discussion with you. So you need to lock that down in your budget to make sure that those things are covered, just like groceries and utilities are. Because if we take all the fun out of your life, the house isn't going to bring you joy either. So the budget's going to be important for that reason. The second reason why that budget is really, really important is that when you confer with your real estate agent, they're going to want to know, what price point do you want to look at? Where is that payment going to be comfortable for you? Obviously, we don't want a real estate agent sending you a home that's listed at $400,000 when your budget is at 300, because you're going to love the $400,000 house and not the $300,000 house, right? Human nature. So we want to make sure that that budget is locked down so that we know, what are we going to tell the real estate agent to look for. That is going to be very important so that you don't disappoint you or your family in actually getting the home that's going to satisfy your family's needs. In the mortgage industry, there are really four basic types of mortgages. We have the conventional loan, an FHA loan, a VA loan if you're a veteran who has served sufficient time in active duty, and also a real housing loan. You'll see on the screen a couple other of items, an FHA 203 rehab loan. That's a very complicated loan product that I would rather discuss in detail personally. The Michigan down payment assistance is one I want to touch on, though. The state of Michigan does have a program available for first-time home buyers or repeat home buyers that haven't owned a property in 3 years, where they will actually kick in $10,000 to go towards the down payment or closing cost to purchase that home. The funds do get paid back if you sell or you refinance the property. And most times when I close those types of transactions for clients, I do tell them, you want to stay in the property at least 5 years so that you gain enough equity to be able to pay everything back, to pay MSHA back, to pay your first mortgage back, and hopefully walk away with some equity to leverage your new purchase with. So that is a program that is available throughout the state of Michigan. There are income restrictions, purchase price restrictions, and again, we can talk in specifics when we do a one-on-one consultation. That program is not done by every lender in the state, so you will want to make sure, if that's the one you are truly interested in, that you talk specifics with that lender. So let's get into, what does a house payment look like? It's typically broken down into some four basic elements. You've got your principal and interest, homeowner's insurance, property taxes, possibly private mortgage insurance if you put down less than 20%, and possibly homeowners association dues. So those are the four key elements of a house payment. I would highly recommend, if you are looking on the internet and you are looking at homes on some of the realtor websites, please don't try to calculate your own house payment. I guarantee you that the factors are not properly adjusted on that website to give you accurate information. That's my job as your mortgage broker, to make sure that I'm giving you an accurate house payment. So some other things that I want to talk about as far as maintaining credit, and this is super, super important in the process. When we pull your credit for a mortgage, we are doing what's called the full tri-merge. It's the hardest inquiry on a credit report. We pull all three bureaus. We take the highest, the lowest scores, we toss them aside, and we take the one in the middle. That's your FICO score or your mid score. You do not want to let people just willy-nilly pull your credit, because every time that happens, your score will go down a few points. The exception to that would be when you're in the mortgage shopping process. We do expect you to shop lenders. So as long as those full tri-merge inquiries for a mortgage are pulled in 30 days or less, that type of pull will not hurt your score. You dip out of the 30 days, it will. Or if you do what I like to call the perfect storm, you apply for a mortgage, then you go hunting for a car and possibly look at a credit card. You don't want to do that. If you do that, you're going to signal to the credit bureau that you're trying to overextend yourself and your score is going to be affected. So please don't let anyone pull your credit, at a store to give you a 10% discount. Be careful when you're auto shopping, because once you lock down that credit score for a home purchase, you really want to keep that intact. The second item is, you want to keep those credit card usages low. There was a time Some years ago, when credit cards were the devil, then we went through a cycle where credit cards were a good thing. Now we're back to where, because the economy is so tight, if you have a balance that is more than 30% of what your overall credit limit is, that is also going to adversely affect your score. So you're going to want to keep those credit score balances down under that 30% usage if you can. And the last item, the continue working on your credit is really seems very simple, but it's not. You want to make sure that all of those payments are made on time. You want to make sure the payments that are expected by the creditor are paid in full. And more importantly, you want to watch those student loans right now. That is something that can adversely affect your credit and prevent you from getting certain government type mortgages if you're in default on a student loan. That's considered a federal debt. So the continue working on your credit also has to be centered around those student loans. The president had them in a holding pattern. Now they're all back again into repayment. You want to make sure that you're in touch with that student loan company. Make sure that if there is a payment that is due, that it is paid on time, because they are now watching that as well. One other quick tip with the student loans: if you are in a position where possibly the payments are bigger than what your budget, again, our budget, our plan is going to allow you to perform, you will want to contact that student loan company and possibly look into an IDR, so an income driven repayment, which will bring the payments down to a little bit more manageable level. We no longer just ignore them, and we do have to hold a payment against you. So that's another integral part about working on your credit.
Yeah, and I'll just kick in real quick, because I've been dealing with a lot of clients right now with student loans, and some of them are in a mess. Like Diane said, some companies you can call and they can kind of help you, but a lot of it can get really sticky and messy if you try and consolidate loans and stuff that like
Mhm.
that by yourself. If you don't know what you're doing, which a lot of people don't, please reach out to somebody.
Yes.
I do have a connection as well. I obviously help with debt and student loans. I paid them off. I know how to manage that, but I do have a good connection, everyone, with a student loan coach that is really that's what she does. So yeah, if you don't know what you're doing, and get overwhelmed real quick, just hang up, shut it down, and call somebody that might know. So absolutely.
Mhm. Yep.
So this is just other consumer areas of need and business areas of need if you own a business or you're seeing this and all that. We like to provide this type of stuff because we're all here to help. I mean, help is everywhere, you guys. I mean, Diane has, all these connections out on the east side. I'm on the west or Midwest of Michigan. I guess you could say I'm west of Detroit. How about that? But we have different reliabilities in different companies. Just a couple other areas that you are going to need throughout, not just your mortgage buying process, but just everything in general. As a tax professional, make sure you have a trusted tax professional, financial advisor, retirement, and wealth management. Realtors, obviously, I mean, Diane, I mean, I don't know too many people that can do their own home and try and go buy their own home without a realtor, to be honest with you. I would
No.
never be able to do it, but some people, every once in a while. Insurance professionals, and then if you have business areas of need, obviously a tax professional, bookkeepers, commercial insurance as well. But the point is, help is everywhere. All you got to do is make the direct contact, the original, hey, reach out. Don't hesitate to reach out. We can connect you with other people all around the state of Michigan, and I know people outside of Michigan too. So, and I'm sure Diet does too. So
Mhm.
that's the most important thing. So I'm going to stop. Well, we'll see questions in the chat if there's any right now, but I do want to, since we're full screen right now, kind of leave up our contact information and QR codes here. I'm going to do about 15 seconds. So I'm just going to pause so everyone can kind of read it. Obviously, this is being recorded and it'll be on my YouTube, Madeline Financial Coaching, hopefully tonight. If not, tomorrow. So the people can see that we're able to attend tonight. So that's the contact. And then here's some of Diane's contact as well. So I'll leave that up for a minute. And then we'll kind of go back to Q&A.
And
Appreciate
if possible, if you would like to make direct contact with me, my cell phone number is 586-612-6714. Again, you can email me at the mortgage1.com email address. That office phone, it has a personality of its own. Sometimes it works, sometimes it doesn't. So again, if you want to reach out directly, 586-612-6714.
And I'll take the blame for that because you did tell me that, and I didn't add it to the presentation.
That's okay.
That's all right. You just sent
Actually,
her,
by law,
and that
by
that
law,
that website and that QR code, guys, takes her right to your website as well.
yeah. Yeah, that it's just something, federally, because I'm licensed, I have to have that printed anyway. So you didn't do wrong, Brian. It has to be noted anyway.
Yeah. So I do have a
So I would like,
I was gonna say I have a question for you, Di. Um, that so like what so we were going back to the credit card usage, just so people can hear this, the credit card usage
yes,
conversation you were talking about. What is, I mean, this is different for each company, but your company and what you look at, the debt to income ratio. Like when people
yes.
need to know when they're looking for a mortgage, what is the percentage that you guys max out at? And because it goes back to a lot of people have maxed out their credit cards this year, you guys, because of inflation.
Yes.
It's just what we're seeing. Um, so that's why it's so important to say, okay, do you have something, Diane, that you could personally run the numbers? Like if I gave you my total income, my gross income, and this is my total debt, you could punch something, get back to me and say, yep, you're above the limit. I mean, how does that work, basically?
Yeah, so typically what we're looking for is not to be more than 44.999% above what your debt to income needs to be not greater than 44.998% of your gross income. And again, it's gross income, not net. So if I were to look at your debts, look at a proposed house payment, I don't want to exceed that ratio. That is the typical one. There are some programs I have, I can actually go a little higher than that.
Mhm.
A veteran program sometimes will let me push the limit. FHA lets me push the limit. So that is why my personal philosophy about that debt to income is you want to examine all the products that may be available to the person to figure out which one fits them the best. Because FHA does allow us to go higher than that 44.999. So in some cases, it may be better to go with that type of financing if they want to buy a little bit bigger home. So typically for my company, that's what I'm looking at. If you've got a credit score of a 640, you're usually golden in any of those products,
Yeah.
although I can go with a lower credit score. So those are the two ways that we look at it at Mortgage One.
Yeah, and if if anyone reaches out to you and you guys run the numbers, it's a little bit high, come call me. You get
Absolutely.
you get a complimentary call, I'll get you organized pretty quickly. And, we'll get you back on track and ready for that house. It might not be this month or in a few months, but it might be 6 to 12 months down the road, but you'll get there eventually. So,
Well, and one important thing that I want to bring up, I affectionately call it the elephant in the room, right? Until someone pulls your credit or takes a look at your profile, you may be sitting home thinking, I'm never in a million years going to be able to afford a mortgage. Let me do it for you. Let me meet with you. Let me take your information and let me look at it. I cannot tell you how many clients I've had, in all my years of experience that think they have terrible credit, they can't afford a house. We get the elephant out of the room and we find out they're in much better shape than they ever thought they were going to be.
yeah.
And then if they're not, as we've talked about already, I have you to turn to for credit, that type of financial management.
Yeah.
I have ways that I can go to the credit bureaus. We may be able to pay down some debts and do a credit rescore on your file, bring up your score, make your debt to income better. There are so many options out there. Down payment wise, you can take a gift from a close family member. You can take money out of a 401k program that will work as a down payment and closing costs. So getting that elephant out of the room is huge. And I really do believe that picking up the phone and making the call is the hardest first step.
Oh
Let
yeah.
us help you. That's what we're here to do. And so that is probably one of the things that I have come across the most in all the years I've been in this industry is how many people think they're in a horrible position and they're really
Mhm.
not. So
Yeah,
give
they're a
us a
little bit
crack at
better.
it.
They're a
Let me
little
take a
but
look at it.
yeah,
We can
they're a little they're a little better off than they think they are usually. And another thing you got to remember is,
Mhm.
is guys, rent's going back up. Rent's going up. Most
That's
of the
right.
landlords I've heard is 10 or 20% more this year. all of a sudden, you never know, a mortgage might be a little bit cheaper than what you're paying in rent right now. You never know.
That's right.
Rent is, it's unbelievable what some of these landlords have done in the last year or two. But yeah, like Diane said, just, reach out. That's the hardest part. And we totally get it. We're non-judgmental, and that's what's most important is no one's gonna judge you, but you just gotta make that initial contact. So
That's right. That's right.
cool. All right, Diane, anything else? I appreciate you hopping on with me today. Hopefully this was helpful, and we'll post this on YouTube. I got a little bit of time tonight, so hopefully I can get this figured out and edited and loaded tonight.
Sure.
And then we'll send it out to some people that were able to be with us tonight. And it will be, I just posted in the comments on mine, Madeline Financial Coaching YouTube. Just follow me, subscribe, and you'll see it under one of the videos there, either tonight or tomorrow, Thursday. So appreciate it.
Wonderful. Thanks.
All
Thanks,
right.
Brian. Great job
Thanks,
as
everyone.
always.
Yep.
Good night.
Bye-bye.